I see the relationship with your bank is critical. Okay, it's like a relationship with anybody. You need to know them, work with them, even understand them to a degree. Because when you need to get something, you need to know that they're going to be there for you. So for me, the banking relationship is just as important as the relationship with your solicitor, your accountant, or any other advisors or mentors. So that everyone needs to be on that same page and work together. From a banker's perspective, we love to be involved with conversations with the accountant and sometimes the solicitor as well. Everybody's on the same page. It certainly makes things a lot easier. We can also advise on what you need and when you're going to need it. What I see in banking quite often as well is people come in and they want a loan and we go, we need this, this and this. And they go, well, I haven't even got that to the accountant yet. So understanding what we need when we catch up with you, we can let you know these kind of things is critical to that relationship. The importance of cash flow, probably one of the single most important things, to be fair. We've all probably heard the saying that cash is king, and we see it all the time in banking. It relates to people will look at turnover and they think because my turnover's gone up or my turnover's really good, that everything else must be good, and they're wondering why they haven't got cash. And that can relate to a lot of things. It could be the business is growing too fast, so they haven't got enough capital to back it up. It could be that your strategy, which is good, to pay your creditors all on time, but your debtors aren't paying you on time. So the reality is you could actually be making money, but if you don't have the cash in the bank to fund it, then what's it all worth? A profit forecast is different to a cash flow forecast. A profit forecast is going to forecast the revenue your business is going to make. It doesn't forecast the cash flow cycle. So that's why a cash flow forecast is really important, because that's going to forecast what your bank balance is going to be each month. So you can work out when there's going to be ups and downs, and then you can plan for it. So the consequence of people having cash flow issues, if we call it that, or the money's not coming in at the time they need it, well, there's several consequences to that. One, they need to be able to find it another way, which could be they come to us and they ask for an overdraft or a bank loan, or they look to other people to invest into the business. But before that, they're probably going to stress. They're going to wonder, why haven't I got the cash? So it's a matter of understanding why that is and understanding the cash flow cycle of the business. But that's probably the most important thing, is that stress will go with it, and then they're going to be approaching people to what we call in the industry, if you like, is a band-aid approach, which is getting a temporary overdraft or something like that to cover a period of time. What happens is that gets repaid, but then they're back at square one. So that's where it's important for the banker as well as the customer to have good quality conversations and work out what is the real issue. What you need to demonstrate to get a bank loan for your business is what I see in two parts. The first part is what we call the data side of it, and that's when you'll provide things like a statement of personal position, which covers your expenses, your assets, your liabilities, which the bank are interested in knowing about. Also, you'll need to be able to provide a good business plan, something that's realistic and that we can understand and talk to you about. Included in conjunction with the business plan, we need to have profit and loss and cash flow forecasting so that we can understand where your business is going. So it's important to make sure you've got the right people that can help you with that and prepare that with you if you don't have the capabilities to do yourself. The other side of getting a business loan is what I call the personality side, if you like, or who you are. And that's as important, probably actually more important than the data side. When equity investors look to invest in businesses, more often than not, they're looking at who the person is, what they do, and what they're all about rather than the data. Because without having good people running it, it's usually not going to go well. The role of the accountant, again, probably looking at it from the banker's side of things, it's certainly changed. They've gone from more being a bookkeeper to being an advisor, and I think that's only going to get more with the rise of the use of MYOB and Xero. There's a lot of stuff you can actually do yourself. And also the fact that once you've done that yourself, then it just gets put onto the accountant and they just do up the books for you. So it really comes back to what are you seeking from the accountant, and that would be that advisory. I've always thought of the scenario if you pay your accountant a little bit more money, but he's saving you more, or he or she's saving you more in tax, is it worth it? Which it would be. So that role has changed. One other thing that we do is through bank accounts, you can link directly to Xero and to MYOB, which makes the reporting side of things really, really easy to get through to your accountant as well as to yourself. The best piece of advice I could give to people that want to go into business: take your time, make sure you do your research, and you've got to make sure you get it right and you enjoy it.